morning, folks. Namaskar. And if you can hear me, I'm going to get into it straight away. The what I'm going to speak about is the current state of the real estate sector in India. And as all of us know, that real estate is one of the largest employers in this country, or rather was one of the largest employers. It also has a massive multiplier effect when it comes to the overall economy, because in a country of our size, and as well as the levels of economic development, and as we all know, we are not a homogeneous market for most things. uh, Real estate, and especially the residential real estate sector, was one of the biggest uh, aspirational sectors. And starting from 2003, we saw the uptrend, and it kind of added to the feel good India growth story. Now, as happens in many sectors where there is a gold rush, the initial years of the gold rush saw all sorts of people come in. It saw a very different demand supply scenario. It saw price trends go into an area where a lot of exploitation happened. And that exploitation ultimately culminated in a series of steps post 2008. One was a developer finance got choked off very, very significantly, and we have the Reserve Bank of India to thank or blame for that, depending on where you stand. We have the governments of the day, including the center as well as the state governments, because real estate is not a central subject beyond the union territories. It is primarily 98% of 97% of it is in the hands of states. And importantly, within states, there are multiple levels of governance around the real estate sector. So that's why it's very complex. And the lack of a proper regulatory architecture between 2008 and 18 in some ways added to the pain. What is the latest scenario? Let me just give you some data, which is the latest, which shows that demand across the top 6 cities in India, as far as real estate is concerned: Bengaluru, Chennai, Hyderabad, the Mumbai metropolitan region, the National Capital Region, and Pune. These are the 6 major markets. And residential demand, and I'll focus purely on residential demand, because commercial real estate works on a different drumbeat, and I would rather focus on residential for this discussion today, and hopefully hoping that all these discussions and debates will find their way into the budget that is coming in around 6 weeks from now. These 6 markets had improved slightly. We had seen between FY17 to the beginning of the current financial year, but in the first 6 months of the current year, which is fiscal 20, there has been no growth in the residential segment. The unsold inventory levels have remained the same. Stable, in fact, for 14 quarters. There have been limited launches. Hyderabad and Pune have the least pending inventory, which also reflects the nature of those 2 cities. And because there is a mobile population that still comes in, smaller size, ticket size homes are getting sold. But Chennai, and this would surprise perhaps some of you here, has the maximum unsold inventory, followed by the Mumbai metropolitan region. Total residential sales were down 5%. And if I were to give you this bit of data, around 136 million square foot in the first half of the current financial year. And overall, the residential sector as an asset class, and this is an important point where I link it to where I began, real estate had become an asset class for the growing middle class. Pre 2003, and I don't know how many people in the audience would be able to recall or empathize and share this with this feeling with me. Pre 2003, there was a significant segment which said that homes were to be built after you had retired, after you'd retired from your government job or from your public sector undertaking job, and also from the private sector. Housing as a belief, cultural belief, if you go back last 30, 40, 50 years, we had this unique situation in some ways of housing for employees in the government sector being catered mostly by the employer. In the public sector undertakings, railways and defense, they were the largest employers, and they also provided the largest amount of housing. And that changed post reforms, but the big takeoff really happened in 2003. That was also incidentally the time when calling party pays principle came in for our mobile services, and a big takeoff happened in mobility, also in real estate and in so many other areas, but I don't want to digress. That 2003 created the belief in a very large section of our population that you could buy a home before you retired. And many of you might know, and I can't see you guys do that, but if you can raise your hands and tell me how many people in the audience are below 30 who have already purchased homes. Well, post 2003, people who had just entered jobs, the first year itself started buying homes. And that aspirational class nature of real estate, according to me, really got broadly dispersed in the wider middle class, not the upper middle class, the wider middle class, first income homes, even first income as in organized sector first income homes, and a lot of purchasing happened. And that became the gold rush where a lot of greedy developers and the lack of policies, lack of regulation, and the multiplicity of regulation across states developed. So where are we now? I'll just take another couple of minutes to explain the current scenario. There are roughly, and there are different estimates for this, but I will go with the estimate of real estate projects launched in 2013 or before that. So I'm using 2013 as the second cutoff, a decade after 2003. So how many homes are stuck? In the city of Bengaluru, projects worth roughly 28,000 crore are stuck. The delayed units, by units means each individual residential unit, that number is estimated at 39,000 total delayed units. Chennai, 10,000, worth around 6,500 crore. So you can see the difference. Hyderabad is roughly 8,900 for 5,500 crore. But the largest two are the Mumbai metropolitan region at 2,10,000, followed by Delhi NCR at 2 lakh. And the value of the Bombay projects which are running behind schedule is 2,34,000. And NCR is roughly half of that, which also reflects, gives you a sense about the cost of real estate in Mumbai, which is traditionally been the highest. So roughly we are talking about 4,64,000, 65,000 crore rupees. Some people give this at 5 lakh crore. That is stuck. And it is important to understand, because if, as I believe that there are four for the mess that we are in today. And I use the word the mess today, despite the 25,000 crore package or scheme that has been announced. Of this entire total real estate quagmire, the total loans extended are $93 billion. Now, this is $1 billion figure, which is averaging foreign exchange values over a period of time. 62% of this $93 billion is stress-free. So it is not as if the entire real estate sector in India is in the doldrums. what happens is perception gets influenced by these incomplete projects, and our eyes do not go to the projects that have been completed. So 62% are completely stress-free. Another 22%, and that would take the total to 84%, 22% are under pressure, but there is a possibility of resolution, and at least the principal component of the loan will be recovered. $14 billion is under severe stress, and there is likelihood that it will not be recovered. Of this total exposure of $93 billion, NBFCs and housing finance companies together accounted for over two-thirds, 66% of the total loans. And that is why the fall of ILFS, followed by DHFL, the situation that we know about HDIL, Altico, the real problem really has been the collapse of our NBFC sector in terms of lending and individual companies. But, and this is one point I want to make, there is so much more to say, but not to take too much time. The stress in the Indian real estate sector is actually minuscule compared to other major sectors. If you take telecom sector stress, which in the recent past has now further built up due to a very adverse Supreme Court ruling. And if you take steel, despite the 3 or 4 companies that have been resolved through the IBC process alone, the total amount of stress in the real estate sector is perhaps equivalent to 1 or 2 companies, defaulting companies in telecom and steel. So the situation is not as bad. But what has compounded the situation? 2 points. One is a monetary lending scenario, which is obviously very adverse. At some point, post 2008, monetary thinking about the real estate sector changed to a belief that all real estate was bad, and that it was a sump for black money. Unfortunately, as has happened in many situations, many of us, and we all share the blame, have tended to equalize cash with black money, which is not a fact now. And post demonetization, that has been conclusively proved. The interest environment became very adverse for developers, and those developers who had over-leveraged themselves, who had indulged in malpractices, and who had kept their pricing very high, caused a domino effect. The second round effect has played out in the recent past, and I believe that the continuous shrinkage of lending to the real estate sector has actually shrunk from 2008 onwards. And if you take the last 10 years, and if you again use 2013 as a cutoff, last 5-6 years, that shrinkage has become even much higher, because banks looked at real estate companies with a far stricter sense. And I believe that there have been virtually no loans that have been extended. And as happens in a company which faces working capital issues, it's not as if the lack of entire capital. Suppose a company needs 100 rupees a day to remain alive, to continue to do business. It is not as if the lack of the entire 100 rupees will lead to a collapse. Even 10 rupees not coming in time dries up the situation and causes a collapse. It sometimes is believed that a working capital or a cash flow drying up has to be 100%. No, just 10% also causes a crisis. And this crisis for the lenders got accentuated after ILFS, because a lot of lot of developers could not repay their loans. There were many cases where loans were recalled. And as we know, HDFC, which was Housing Development Finance Corporation, is perhaps the strictest in this regard. So, it's a paradox. A company that was formerly called Housing Development Finance Corporation has been the strictest when it comes to giving loans to the housing sector. So there is much more data that I have, but I will skip that and I will just come to two points in conclusion before I hand it back to the MC. So developers continue to face liquidity issues. The recent scheme of the government is a welcome step for the following reasons. One, that it was to me an explicit recognition of the stress. And it also gave up this moral hazard argument that, we don't need to do anything. Let the market, the buyers, the developers, and the lenders sort it out. That's never going to happen. And because once you have an unfinished project on a piece of land, remember that piece of land can never go back to becoming agriculture land. Look at Shingur, for example, not a comparable example, but the nature of real estate is that once the land has been converted, both in government records from agriculture to commercial or mixed use development, and once you have dug foundation into that land, that land can never go back to becoming agriculture land. The cost of demolishing an incomplete project is also very, very significant. There is an environmental cost associated with it. The sunk money can never be recovered. You cannot pull out the steel rebars from a project or take out the cement and put it back in bags or take out the wiring. It's all gone. So real estate by its very nature needs some sort of bailout when the sector is in stress. World over, especially in the United States, we have seen this happen. And sometimes people in India confuse the US housing crisis, which was a mortgage crisis, where borrowers were unable to repay because these were suboptimal or subprime borrowers. In India, a very significant section of borrowers who have bought real estate, like I told you, from 2003 onwards, were the aspirational class. Their ability to repay existed, but they got stuck because projects were not given in time, or they were having to pay rent plus repay their loans. And this was a unique situation. In the US, the subprime crisis was people who were living in homes, finished homes, were unable to keep up with the monthly repayment, and they were evicted and those houses were taken back. And very quickly, because there were functional houses, the guy who took them back, either the same lender or a different lender or a asset management company, they picked up those houses and sold them. In India, you cannot sell them till you complete these houses. And that's why at least a start has been made towards completion. The second point about the government's, when you had epochal movies and this slogan "Roti Kapda Makan" coming from there, I don't know how this thinking has come into our bureaucracy and decision makers at some levels about affordable housing. Well, affordability is related to your income, and I don't believe that any government should be deciding how you spend your income. Governments and authorities are meant to create the right environment for people to earn, and it depends on individual skill sets and so many other factors to decide who gets paid how much. I think it's the worst form of deep-rooted communism stroke socialist kind of thinking, which decides to go into affordability. what has now happened? If you look at new supply, and this is one more data point, I told you over the last 5-6 years, the number of stuck projects. Now take one more data point into account. From 2014 onwards, roughly 545,000 new units have been launched in 7 cities. In 2017, post demonetization and RERA, this dropped to 1.46 lakh units. And from 2018, there was a slight gradual increase. In 2018, 1.95 new units were launched. And this, till most recently, almost the first week of December, has risen to 2.3 lakhs. So you have this. Now focus on this piece of data. You have roughly 5 lakh houses which are incomplete, and you have roughly 2.3 lakh, 50% of that nearly, new houses which have been launched in 2019 alone. So there is demand, and that is why this huge error and fallacy that has crept into our policy to sometimes explain away our real estate situation and compare it with the US subprime crisis, I think that is utter rubbish, if I may use that word, and it does not take into account what is the reality of the sector. If you have 50% equivalent of new houses and demand being generated, that means there was demand. If you had completed those 5 lakh houses, that demand would have been met without new land being consumed, without unnecessary fresh investment going. There would have been a secondary market created around these once the first buyers would have been able to exit. All you needed was a top-up fund and a decisive action, which we had proposed to the government, but perhaps it was thought that that is not to be done, where you would have taken and provided some money on a project-wise basis to the owners to do self-completion of these projects. In Delhi, if some of you recall, many years back, the cooperative group housing society units were not being allotted till people forcibly moved into their half-incomplete projects, completed them on their own and started occupying, and then they had to fight a case which ultimately went to the Supreme Court, and over 2-3 years later, those self-allotment houses were regularized. I think we are at that situation because even with the scheme that has been announced and there is some amount of demand that has come in, prices of those old projects have not fallen, the projects that are incomplete. And that is why I believe that our real estate sector will continue to see pain till you solve the issue of incomplete projects. No amount of new inventory that comes in will solve the pain point, because what we are actually doing is in some ways that while certain body parts are diseased and are not functioning well, we are continuing to feed vitamins to the patient. What we had to do was to take decisive action on those houses and those projects to complete them. Last point, that recent scheme has made an attempt. We'll have to wait for the full results of that scheme to play out. I believe there are applications that have come in from various people, various developers with regard to that. But we'll have to wait for the final data to come in. But clearly, that recent scheme is just step one. I would urge the authorities, I would urge the policymakers to consider a more focused project-wise approach, where instead of putting in government funding or LIC funding, all that we do is to ask the developer who has already financed that project and the buyer who is already invested to sit together and bring in a third-party company to do the finishing. The Supreme Court has already initiated that in a couple of cases, 2-3 cases, and hopefully, if it was done on a project-wise basis, we would see greater results, because I don't have to tell you this, until we fix this issue, we will not be fixing a very, very significant part of our demand dip that has happened in our economy. With that, it's back to the moderator.